Okay, let's dive into something really fundamental, but, often missed in trading, market sentiment.
Yeah, absolutely. We're looking at some notes here. They're titled Trading Blind Without Sentiment Analysis.
And these notes, they really cut straight to it, the main message. You just shouldn't trade blind.
Exactly. That's the core idea right there.
So our mission in this deep dive is basically to figure out why. Why knowing what the actual crowd of traders is doing
In real time.
on any specific asset is so critical. Think of it as like getting market x-ray vision to help you avoid some, frankly, painful mistakes.
That's a good way to put it. The analysis here really hammers home that knowing how traders are positioned helps you dodge those classic traps.
Like getting in way too late.
Yeah, or taking trades without real confirmation, or just completely ignoring what the crowd's already done.
And, well, it makes perfect sense when you start digging in. The notes explain that even a chart setup that looks absolutely perfect
Bulletproof, yeah.
it can just fizzle out,
Yeah.
go sideways, if you don't have that context of the crowd's positioning.
Right. Checking sentiment first, that's presented as the key, makes avoiding those mistakes much, much easier.
Okay, so what are some specifics? The source breaks down actual scenarios where sentiment gives you that missing piece charts just don't show.
Yeah, it does. Let's take the first one. Mistaking silence for safety.
Oh, I bet a lot of traders fall for that. You see a pair, nobody's talking about it.
Yeah.
Seems like a clean slate,
Right.
an untouched opportunity.
But these notes, they offer a pretty stark warning. That silence often means serious uncertainty.
How so?
Well, you look at the actual sentiment data, the breakdown of long versus short positions.
Play the percentages.
Exactly. You might see it sitting near 50-50. That's just pure indecision, no edge there.
Right.
Or maybe even more interesting, you see one side kind of quietly building up positions. That could signal a move is brewing, under the surface.
Okay, interesting. Now, this next point feels really crucial. Reading breakouts without context.
Ah, yes. The classic scenario. Price pushes through resistance on the chart. Looks like a go signal. You jump in, buy.
Happens all the time.
But here's the kicker from these notes. What if the sentiment data shows most traders were already heavily long before that breakout even happened?
Whoa.
Yeah, is right. It completely changes the picture, that breakout. It might just be weak hands getting out, taking profits.
Oh, worse.
Or worse, it's a fake out. The very end of the move because, well, there's no new money left to push it higher. The crowd is already in.
So you got to ask yourself, did the crowd beat me to it, or am I just jumping on the bandwagon right at the end?
Precisely. Are you earlier or are you the exit liquidity? Sentiment helps answer that.
Okay, what about indicators? Your RSI looks oversold, maybe MACD's crossed up.
To standard buy signals, yeah. Looks good on the chart.
Seems like a clear buy.
But again, the analysis adds this vital layer. If sentiment data shows traders are still, overwhelmingly short despite those signals,
Even with the indicators looking bullish.
even then, the notes basically say, whoa, maybe hold on, it might not be time yet. Sentiment acts as that reality check.
Does the crowd actually agree with your indicator, or are they still betting the other way, maybe expecting another drop?
Exactly. It puts the indicator signal into context.
So the big takeaway here seems pretty clear. Sentiment adds context that charts just, well, they miss.
They absolutely do. It lets you see what other traders are actually doing with their money.
Before you commit yours, before you pull the trigger.
Right. And by adding this layer, you're just trading with so much more awareness of the whole market picture.
And that awareness ultimately can save you from those trades that look great technically, but just don't have the crowd support.
Or worse, have significant crowd pressure working against them. It can definitely save you from some costly missteps.
Thinking about this, sentiment isn't just data, is it? It's the sum total of thousands, maybe millions, of individual decisions. Fear, greed, uncertainty, all aggregated.
Collective psychology in action.
So here's a thought to leave you with. Given that sentiment captures this mass psychology, just how much bigger a role might this collective behavior play in actually driving market moves than maybe our traditional chart and indicator analysis usually gives it credit for?
That's a really interesting question to ponder. How much is psychology versus pure technicals?